Good afternoon, ladies and gentlemen. The intense pain in the equity market is only increasing on a regular basis. Today, the IT index is down somewhere like 4.8%. Early morning, these losses exceeded 5% with the carnage on cybersecurity stocks that was happening on Wall Street. It is also the last trading session of the FNO expiry for the month of February. So in all, the bulls are completely on the back foot as far as market sentiment is concerned. But it's our weekly check on the metal space, and no other than Mr. Kunal Shah, Head of Research and Commodities at Nirmal Bang Securities, joins us. Kunal is a veteran trader in the world of precious metals as also in other commodity classes. Let's join him on the show and understand how these markets are structured. You will also see a lot of data on the screen on comparative performances between equity markets and commodity markets, and within both of them on how individually they have performed. Namaste Kunal ji, a very warm welcome. Silver down 13% so far in calendar 2026, yet it's a top performer. How are you watching the gold and silver markets at this point of time?
I think the precious metal, after a profound correction what we saw a month back, we are seeing a sharp recovery taking place on account of two main reasons. One, the geopolitical concerns. The US-Iran issue is really on the verge of escalating further, and apart from that, the tariff uncertainty have again come back and created chaos in the global financial markets. So these are the two reasons why precious metal have started to do well, and going forward we believe that whatever has happened with the US tariff front, that makes me believe that the possibility of another round of direct or indirect form of quantitative easing is on the cards, because whatever losses which Mr. Trump is going to account after the Supreme Court's decision over there, it has to be brought up by someone, and I don't think so that people can really bear those losses. So I think the Fed may have to print more. From last 2 months, Federal Reserve is initiating a process called reverse repo purchase, in which they are continuously on a day-to-day basis infusing liquidity into the financial system, and that is what is basically fueling the rally in the bullions right now. So these two expectations, the geopolitical uncertainty and now the tariff uncertainty, so these two will continue to fuel the upside momentum in gold. 50 to 80, 50, 300 are the kind of levels which we can expect going forward, and silver $90 and $94, $95. So I'm not still outright bullish on silver by giving a bold targets, but I think the possibility of another 7 to 8% upside in silver and another 3 to 4% upside in gold very much is on the cards.
Okay, so geopolitical risk, especially in the Middle East, with the advent of the American military power being sort of got together in the Straits of Hormuz versus Iran, is creating a lot of issues with the equity side and money going back into precious metals as a not only margin of safety but also as a safe haven asset. Moreover, the issues that have been faced by US President Trump versus his Supreme Court ruling on his adverse Supreme Court ruling on his tariff plans have also made investors skittish. But here is the most interesting part, ladies and gentlemen. Hindi में एक कहावत है, अर्श से लेकर फर्श तक. This is the performance of silver. On Jan 29th, silver hit an all-time high of somewhere like 4,20,000 rupees per kilo, and right 2 days later, somewhere in 2nd February, it was below 2,31,000 rupees per kilo. So very sharp sell-off. but at this moment it's at 262, 262 thereabouts per kilo. So it's recovered very sharply from a recent low of 228. And as Kunal says, a 7-8% upside is what he sees. Kunalji, what are the physical markets of silver telling you? What is the premium of cash silver over silver futures in Zaveri Bazaar? Any trend that you are able to discern?
I think right now, if you look at what is happening on the industrial demand side, okay, there's no much industrial demand. The physical market is quoted at a discount. In Mumbai, it is quoted at a discount of 1,000 rupees than what is trading at MCX futures. So this is an indication of the weak industrial demand in India. And also today, we are seeing that after a pause of 8 days, Chinese markets have opened up, and silver over there is up by almost 8 to 10%. So that is basically taking a cues from the international market, and that is what is fueling the rally right now.
Okay. So essentially, it's also the unwinding of the speculative trade in the market where you see physical silver trading at a discount to silver futures. That's also the case, Kunalji. Can we also interpret it that way?
Yeah, so that has been a case throughout the year when the prices have rallied. The physical market is not responding, but the investment demand in form of ETF and other products and Chinese buyers are very much active. That is what is fueling this rally. So this is nothing to do with the strong Indian industrial demand, but it's the global investment demand coupled with the strong Chinese demand is what is fueling the silver's rally.
Okay, fair point. There is also a view in the market that for 2026, maybe for some period of time, you will see gold outperforming silver. How do you look at that?
Fundamentally, I completely agree with the statement which you have said. Gold should outperform silver going forward because until there is any indication of the exponential rise in silver demand at these levels, I think the possibility that the gold may outperform silver is very high, considering the kind of environment we are living in. We don't know what Mr. Trump is going to do next after the Supreme Court's decision. This 15% tariff is not going to do any good to the United States of America because China, Brazil, India, all of them are going to pay a lot less tariff than what they used to pay earlier. So I think it doesn't go well with the US, and hence we believe this uncertainty will continue to favor gold more than silver. So fundamentally, gold should outperform silver, and gold should do much better than what it has done in terms of the ratio trading in the year 2025. So this is the year of in gold silver ratio, the gold should outperform. That is our base case call.
Okay, fair point. And you've already mentioned that 52.80, that's ladies and gentlemen, the dollar per ounce price is what Kunalji is looking at.
Yes,
$5,280 per ounce, about $5,300 an ounce is the immediate target that he has in mind. Kunalji, because you track other commodities as well, and in your opening remarks you had mentioned the Middle East crisis, how are you watching crude oil?
I think that's the commodity you should watch out for because that's where the plenty of action which may take place if US attacks Iran. And if there is a blockade in Strait of Hormuz, then I think the possibility of abrupt rise in oil futures. So I think almost $5 is discounted. Another $5 to $10 possibility of upside is still there. So let us hope and pray that kind of scenario doesn't happen. But if that happens, if the US attacks Iran and the Strait of Hormuz gets blocked, I think the oil prices can shoot up further by $10.
Okay, so that's the scene, a scenario that we probably might be staring at sometime next week, given the military build-up that's happening in the Persian Gulf. Kunalji, a view that you might want to offer on the entire commodity space or the equity space, lack of participation, very sharp falls that are coming in. What are your ultra HNI clients telling you? Are they more in cash? How are they moving their assets?
Okay, so I'll give you a broader scenario. I don't know about my client, but what is happening across the globe is I think there is a major disruption taking place in terms of the technology, and that is what is creating fear that going forward, a lot of these jobs may be taken over by the advent of the AI and the way the AI is advancing these days. There is a fear amongst the street that there has to be a massive job losses, and that is basically that scenario was never discounted in the price. So that is basically started to get discounted in the US, and now in India we are seeing the massive sell-off in the IT sector. So whether it is going to take place or not, that time will tell. But the market is telling you that there is disruption which is basically caused by the AI, and that is for real. So I think the broader markets have remained weak, and at the same time, when this AI and other technology are advancing, the demand side of the commodity is going to get brighter. The more and more powers are going to be required, the more and more coppers are going to be required, and the production side is relatively going to remain weak. So commodities are going to do much better in terms of the return side. I think most of these commodities will continue to give you handsome returns going forward in the year 2026. May it be metals, may it be precious metals, may it be energy. So as an asset class, commodity is a place to be in this kind of scenario where there are a lot of geopolitical uncertainties, fiscal uncertainties, and we don't know what is going to happen post AI. So you need something to hedge, you need something to park your money where there is a possibility of safety, and in that scenario commodity fits very well. So we remain quite constructively optimistic about the outlook on commodities, and we believe that commodity rally is plenty of more room rather than expecting a moderate return. So I think commodities are going to do well in this environment.
Okay, let me just ask you the same question a little differently. For your own portfolio and for your ultra HNI portfolios, are you likely to be more overweight commodities in 2026 than equities? This is despite the sterling gains that we've seen in the last 6 odd months as far as both gold and silver are concerned. Where is the thrust of money in your own personal space?
So I don't have any investments, or I do not own a lot of investment. But what I can recommend is that in this kind of time.
No, my apologies.
Yeah.
My apologies. I meant for your ultra HNI clients.
Yeah. So our clients, we don't track the position of clients, but I see that the more and more clients are now realizing the power of hard asset, the real asset, and hence I see the commodity investment or the investment in the commodity stocks have increased in last 3 months drastically. The exposure towards commodity, more and more people wants to own a real asset, hard asset. So we see this scenario that more and more people are owning these commodities and commodity stocks.
Right. On this very positive note, Kunalji, thank you for your time. And also, as always, this weekly roundup on commodities is something that I also look forward to. Have a nice day, sir, and here's wishing you all the best.
My pleasure.
That, ladies and gentlemen, was Mr. Kunal Shah, Head of Commodities Research at Nirmal Bang Securities. Thank you for watching. Please stay glued to Business Day Television.